morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 26, 2025. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Real quick note, this will be the last pre-market video until next Monday, which happens to be December 1st, 2025. So observing the Thanksgiving holiday here on Thursday. And again, the market open a half session on Friday, but will be out of the trading room until Monday. All right, looking at the ES here, very narrow range right now, 25% heading into the RTH open. Very bullish start to the week following a bullish finish to last week, and right now holding at the highs. This could suggest, again, more uptrending price action today. Maybe as much as 80 points of range could be seen today in the best case scenario. But keep an eye on the previous session's high. Keep an eye on 6,800. Any rejections above those levels and a failure to hold that level could push price back into yesterday's range, perhaps as deep as the previous session's midpoint. But absence of a strong rejection here early on, this market could just tend to float or melt up here heading into the extended or the holiday shortened week. All right, looking at the NQ here, looking at the last few days, very, very bullish as well. Those 3 days here, especially from the Friday reversal, the push through the Thursday midpoint right there, which was a massive day, that opens the door to pushing to that high. So anytime you're pushing through the midpoint and closing beyond the midpoint of a major rejection day, a high range statistical anomaly day type session there, to push through that edge, 9 times out of 10 you take out the high. So we're still working our way up. That's very bullish here moving forward. But again, like 6,800 for the ES, where we've seen some weakness, we've seen some weakness right in this area too, and that's around the 25.3 level. And you've seen it push down here, you've seen it turn, and we're coming into it again. Do we turn again at some point up ahead? These markets are developing a kind of head and shoulder style pattern, if you will, right here, which looks very, very symmetrical, looks well developed, and the right edge is where the most risk is to be long here, because that's where you could see a drop back to the bottom and the neckline, or worst case scenario, breaking to the downside and continuing. Now these patterns can also build out and eventually break to the upside as well. And it's that edge right here that makes the most sense. So 25.3, big time level for the NQ. Looking at gold, crude oil, flat session, quiet day at the moment. Inside day, still hanging near the lower edge here, hanging around 58. This is, again, about the most time we've spent below $60 a barrel in a long while, and it could continue to leak a little bit lower, but as I mentioned before, in about 1 to 2 weeks, we could see the seasonality begin to change, and that tends to lead to strength into the end of the year, the final 2 to 3 weeks of the year, and that can spill over into strength into January, February, and even early March against seasonality. So again, maybe one more drop, followed by the potential to go get that FOMC key level at 60-65 as a high probability target, and then perhaps even some overflow to the upside towards 64s to the September FOMC target. All right, looking at gold futures here, up 1% right now, continuing to trade near the center portion of the wider extremes. That's very similar to what it's done before. We are coming into that 42.50 high. Maybe a rotation back down could be seen right now. But again, this is lower volatility price action than what we've seen. Better for selling premium on some of these days here, as we've kind of just built doji-like days day after day. At some point here, obviously, once this compression's done, we have a really good shot to extend these gains yet again, or at least seek the next price discovery phase, whether up or down. If it is down, it's a reversion to the mean. The mean may come to play catch up. This thing comes over here, we're bouncing off 3,900 and rallying down the road. So something like that could play out. Right now, got to be patient with gold. Looking at the YM here with a great turnaround. This trap in reverse was significant, and the previous session to get that early breakout and lead higher alongside RTY was huge, held the gains, and right now we're holding at the highs. Narrow range, just 20% of ADR. That's not much of a range at all. Only 155 points. This thing's been averaging 726 on a 10-day basis, on a developing 10-day basis. As of the previous sessions, around 760. So keep an eye on the previous session's high. If there's any rejections above that level, we could see a rotation back into the range, perhaps into 47K early in the day. Bulls may want to defend a retest of 47K for a check mark approach higher. So new lows could lead to a check mark continuation. That's kind of been how this market has played out each of the last 3 days. Early weakness has been followed by defense and reversals for a continuation higher. So check mark continuation higher unless we see a significant rejection above highs that could lead us as deep as the previous session's midpoint. So right now showing quite a bit of strength here as we head into the holiday tomorrow. All right, looking at Bitcoin. This one is the one that I continue to mention. Makes me the most nervous about any potential turnaround because it hasn't found a low. I mentioned before that if we start to turn down, this one and Ethereum would be the first to tell us, and they were the first to put in strong highs in August. Retested those here in October, and we've seen significant meltdowns since. But we haven't really found a big time reversal or rejection. We've seen a flash low and the typical bounce after a flash low, but that's not necessarily a strong low. And as of the last 3 sessions since that low, we've only seen this teeny tiny price action right here. No real bounce, no juice. Price continues to trade below the 8-period PIMA. You're starting to see a very highly aggressive, stacked and sloped higher period pivot-based EMAs. All of this suggests more weakness. Now again, like we said, 30+% pullback. That's not bad for the next rotation. This was 30-something%. The one before that was as well. And we've seen tremendous rotation since. So it's not bad, but we could get a false bounce and then crash again. But right now we can't even get a false bounce. So this one's going to be one to watch very, very closely until it finds that low. Is it 75 again? That's a great spot to retest. But the way it looks now, it wouldn't be surprising if 75 could be breached as well. Looking at ETH, this one right here has had quite the meltdown as well. This is up here at triple top territory at 4,800. Broke the range to the downside here. Key range targets coming into view here for both Bitcoin and ETH. This one's nearly there now. Still trending downward, still in a bearish PIMA trigger zone. Not following a strong low either. So that would suggest more weakness here. At some point here, do we get that next rotation down? 2150 is the next market structure level down. But by way of good value here, the S3 band on the PivotBoss bands here on the yearly setting here would be something sub 2000, around say 1800 here, and that could lead to a great reversion back to value and above value down the road. If you're looking purely at the FOMC key level of 4010, then a 2005 entry could be a double opportunity if you're patient. Something sub 2005 would be a double back to that level. So we're seeing the potential here, but all of that suggests at least one more wave down. Do we get at least another wave down? All right, that is it for now. We'll see how this plays out here heading into, again, the holiday shortened week. This will be the last pre-market video until Monday morning, December 1st, 2025. Everyone have a fantastic Thanksgiving holiday, and I'll see you in the trading room. Take care.